All right. Good afternoon, everyone. Hope we're doing well.
Good afternoon, sir. How are you doing, sir?
I'm okay. I'm okay, thank you. All right, so let's start. Share your screen. Anybody can start. Let's do practical analysis from what we have been learning so far. So either you or Moses, share your screen and let me see how you analyze the market. Let's go.
Let me try my hands. I pray the stop does not glitch. Uh,
So you just do like a top-down analysis and project. Don't use GBP USD. Use a random pair. Use AUD, JPY.
Ah, Papa, why now? Uh, okay. Uh, okay. Can we see my screen first?
Yes, we can see your screen.
Okay,
AUD, JPY.
okay, sir. AUDGPY. Ah,
AUD, JPY. Moses, be ready. You do CAD, USD. No, USD card. Sorry. USD, Canadian dollar. Moses. So
AUD.
start preparing your charts.
Okay.
Start from the monthly time frame. Tell us what you are seeing and what the market is doing. Then you end up with what we should be expecting for the next week.
Wow. Okay. This is the monthly time frame for AUDGPY. And earlier we had an uptrend here, or it was a break of trend of break of structure. And okay, like we had, where is it? Sorry. Um, uh,
If you are using an earpiece, please remove it. We can't hear you.
oh, I'm not okay. Probably it's my voice. Can you hear me now, sir?
Yeah, it's better.
Oh, okay, okay. I think it was my voice. Sorry. Uh,
Okay, so for it, or you know what?
yes, sir.
Take 2 minutes, just do your thing so that you will not be muffling words. Take 2 minutes, check the charts, then you can explain to us.
Okay, sir.
So, Abel, I want you to open Euro JPY. Euro JPY. Or no, we're already doing one JPY pair. Let's do NZD. Let me see. Let's do NZD. Euro NZD. Let me check the pair. Euro NZD. Yeah, Euro NZD. New Zealand dollars. That's a good chart. So we are analyzing the market. I want to see how you can analyze the market from the monthly time frame down to 15 minutes. So Prosimion is starting with Australian dollar, Japanese yen. Moses will follow after with US dollar, Canadian dollar. Then Abel will be next. You will do Euro, New Zealand dollar. So open your charts. I give you guys few minutes. Open your chart, do the analysis. So when you are done, Simeon, you can start. Anytime you are done, just start.
Okay, sir.
Charlie, waiting the happen now. These are just chart analysis.
Okay, sir. Let me start from the monthly. Then we'll break it down. Teach yourself. Okay. Sorry. Like we can see here, previously there was an uptrend from this point because we kept having a low and high and higher low and higher high, higher low, higher high. But here, though it's not entirely glaring here because it's monthly and particularly this the candlestick uh comprises of each candlestick represents 1 month on the monthly time frame. So one can, for example, using this now and this, one can take it as okay, we are focusing on maybe the body and the week might not really have a say. So if we are to judge based on this, we might conclude that okay, this low here has not been broken. So the market might still should still be on an uptrend according to the monthly. And if we use this particular one, yes, this I think this even shows us better. Yeah.
Sorry, can you close the panel at your right so we can have a full screen?
Huh?
Can you close the panel at the right side so
Oh,
we can have a
okay, sir.
full screen?
Sorry. Okay. Like this, sir.
No, just click on, wait, click on this, click on this guy.
Oh, okay, sir. Okay. Thank you, sir.
Okay.
All right. Okay, yes. So like I was saying, uh using this, we will be careful not to uh, conclude that we are already on a downtrend. Yet, based on this low here that seems to still be active, so we'll be expecting that okay, it is when it actually breaks this low here that okay, maybe now we can actually take with more confidence that we're on a downtrend. But when we come lower to the weekly time frame, then it starts opening up more to us. Yes, like this.
Sorry. From the higher time frame, from monthly, is there
Yes,
any
sir.
pattern that the market is giving? Okay, Leon is here. Sorry. So, Mr. Leon, I want you to open, you're welcome.
I'm welcome. Thank you. Thank you.
I want you to open a chart which you are going to analyze for us, right?
I'm doing this on my phone, so it's a bit, I don't know.
Oh, you don't have a laptop.
Okay, Zoom is mostly on my phone.
Can you switch to a laptop because we want to analyze the market today? Is it possible?
Let me try.
Okay, so GBPUAD, AUD rather. So you'll be analyzing the British pound and the Australian dollar.
It's okay. Let me switch. Let me switch.
All right. Sorry, Simeon, for the interruption. Let's go.
No problem. You were asking me a question, sir,
Is
before.
there any pattern you see forming here? Shrink your chart. Mhm. Does it look like a head and shoulder or not?
It looks like it's
Okay, just go on.
okay, it looks like it's uh That's for the monthly. But from the monthly, I think the reaction we get around this area would also confirm whether we're having a reversal back to an upside, or maybe this particular, because there seems to be a trend here, and we have to keep in mind that it's a monthly. When we go down to weekly and daily, we'll see better. So there seems to be one here from here to here, then maybe another break of structure here, but then this resistance now would give us another confirmation that okay, maybe the market will still come back to sell, like sorry, just 1 minute. Where are you? Uh, yeah. Maybe this will push here and here, or maybe it will break through and continue. So if we come to the day, the weekly, uh, it's getting clearer, getting clearer. So according to the weekly, also, it's this particular trend here seems closer to breaking this or this one, but yet it has not broken it. But also here is now looking like inverse head and shoulder. If you look at it very well, this one. So we should actually be mostly expecting the market to actually touch this resistance here, based on this pattern. Okay. And like you can see this, I think it's more clearer on the weekly that this support is actually very active. This area of support here is actually very active. 1, 2, 3, at least glaringly 4. So also another reason to actually note what the reaction will be based on the activities going on here. And I think, okay, if we if we draw our trend line from here down to here and here also down to from here also touches down to here. So, but we have a little prompting from okay, especially from here. This sorry, let me draw down this one, right? Yeah, let's use this place. Also place. Then we'll come down to the daily. Okay, this is the daily time frame. On the oh,
Um, for your trend lines,
yes, sir.
um, we have relevancy test for trend lines, right?
Yes, sir.
So your trend line must be relevant in relation to the current trend. In relation to the current trend. So if any trend line you have now that is not in relation to the current trend, it will bring confusion. So for example now, well, this is just to guide you because if there are too much lines, the lines can be misleading sometimes. So if you are drawing a trend line, just make sure it is relevant to the current trend. So try to wrap up like in 5 minutes. Let's see.
Okay. Okay. Regarding the relevancy, that I believe this yes, this particular one seems to be active at least for now. So based the on the daily, we have something more like an uptrend present the unable to okay. Um, yes. Um, so, yeah, uh, we can use here for example, and we have another one here. And presently still move. Well, I think with all indications so far, it's the market should test this support actually. Then we'll have confirmation there of what should eventually play out, maybe a continuation or a reversal of trend. But let me not jump ahead of myself. Coming to the 4 hour. 4 hours, 4 hours. The 4 hour also still shows us that we are still more on an uptrend because this lows here has not been broken, and then we have an high here and we have an higher high here as well. So from my end, I would just wait for whatever reaction occurs around this zone. My expectation is that the market would react here, touch it and then react. And we have conferences to confirm whether to continue buying or if there will be a reversal, eventually. I think that's it for my end for now, sir.
So on a 15 minutes, if you want to take a trade on this pair now, what will you do?
Ah.
That's the reason for analyzing the market now. You want to either buy or sell. So what's the final conclusion? Like, okay, as this trade here, is either you are waiting to buy or you're waiting to sell?
If I'm the one, I would wait. I would wait for this to come here, react, and then continue. I'll wait to buy from around it.
Okay.
So when the market comes down here, because it might not reach here eventually. So that's why we'll be waiting for. I'll be waiting for the reaction close to this zone. So the conference is to either to most likely continue buying at least here.
If you observe
Yes, sir.
the market on that point there is actually consolidating. If you draw a box, it's just making highs, lows, highs, lows. So it's consolidating. So if it breaks outside that box to the up or downside, it will be a massive one because of the structure you have on the higher time frame, which is showing you that it's a reversal pattern, head and shoulders. Do you understand?
Yes, sir.
Please share my screen. Thank you so much for the analysis.
Okay.
Australian dollar, Japanese yen. Please, if you are following what we are doing, drop 1 in the chat. If you are lost, drop 2. Okay, 2. Okay, so everybody is lost.
I know me, I just came a bit late, that's all.
All right. What we are doing today is that so far what you have learned, want to practice it. So we'll be having sessions like this. So I have given each and every one of us different pairs. All you just need to do is to analyze the market. So let's say you are a trader now, you have money in your account, and the pairs I have given you, you want to either buy or sell. So how would you go about it? Analyze the market, let's see. Because it's only when you've analyzed the market, you can determine whether to buy or sell. So we have been analyzing the AUD, which is Australian dollar, Japanese yen. So as a day trader, usually your analysis should start from the daily time frame. But to give you a broader view of what the market is doing, it's advised you can look at the monthly time frame. Just look at the monthly time frame to see what the market is doing. So first of all, we open our chart, we shrink it. If we shrink this chart, right, we are shrinking this chart on a monthly time frame. What can you observe? Is this market on an uptrend or a downtrend? Just drop the comment in the chat. Is it on an uptrend, or what trend is this market on from the monthly time frame? Is it uptrend, downtrend, or the market is consolidating?
Downtrend.
Just drop your comments on the chat. Drop your comments on the chat, then I can call anybody to give a reason. Why do you think is an uptrend or a downtrend? Okay, downtrend, consolidating. Yes, Abel, Simeon, please, I want you guys to be responding fast. It looks to be consolidating. Okay, so Mr. Leon, why do you think this is a downtrend?
Okay, me, I'm just looking at the, what's it called? The resistance bar.
This is the resistance.
I'm just looking at the resistance, and I'm seeing like it doesn't seem to pass through the resistance. And then yeah, mostly I see that it doesn't seem to pass through the resistance.
Okay. Moses, why do you think it's consolidating?
It's not breaking any new highs or new lows. It just keeps reversing up and down, up and down. If you should draw a rectangular box, you notice that it's just moving around the same area. So basically, there's no really any new trend. So the market is just consolidating. That's my own interpretation.
All right, thank you. Mr. Leon, this is a trend. There is a law, market keeps making highs. This is a high, this is a low. This is a high that must be higher than this high, which is a lower high. Then it forms a higher low that must be higher than this low. Then it makes a higher high. So when we have a structure like this is what we call as a trend, right? So the market must be making highs and lows before the market should be on a trend. At least two touches. At least two touches. So this touch one, touch two. So this makes and confirms this a trend. And in this case, we would say this is an uptrend. right? This is an uptrend. If we reverse this, same way, we will say this is a downtrend. So you can that's why you use your trend line tool to always confirm the highs and the lows that the market is forming. So you can either draw, actually it should be drawn here, not the bottom. So this is a trend because the market keeps making lower highs. So these are lower highs here and a lower high here. So this confirms to be a downtrend, right? This is understood. Now, the market can go this way, making equal highs, right? Making equal highs. This market is said to be consolidating. Why? Because it's making equal highs at a spot and is not breaking through. So this market is consolidating. So you can see the touch here, touches here. This makes this a consolidating market. Or consolidation, whichever one. So these are the three trends we have in a market. So anytime you open a chart, you either see any of this. You either see any of this. So going back to our chart now, what do we see? Market making low here, high here, low here. This is consolidating. Although, like from a higher time frame perspective, this market is just consolidating. And guess what? It has been doing that since, look at this year. It's been doing that since let's say between 1994, 5, around here, which is this. It's been doing that. Just low, higher, lower, higher, lower, higher. For over how many years? You can count the years up until now. So understanding this as a trader just gives you an edge. So it just gives you a wisdom that this where the market is now, just judging from the higher time frame perspective now, it just tells you that where this market is now is not probably going any higher than this. Because, brother, for the last 25 years, the market has been doing this. So anything that will make this market break here, it shows you that there must be something strong that will happen to the Australian dollar that will make it break this level, because this level has been for the past almost 25 years here, here, here. So this is a very, in fact, it's like an eternal resistance, very strong. Same thing is happening here. Same thing is happening on the what's it called? On the support level. If you draw a line here, you can see. Take out this box, you can see 1, 2, 3, 4. Same thing is happening. So what you will do is to mark out a zone. This is a zone now. This is a zone for you. And this is another zone for you. So on this pair, all you need to be doing, you don't need to be smart. You just need to be following what's happening. So when the market touches into this zone, look for sells for maybe a whole 6 months or a whole 1 year. You just be, for example, now, this market, all you should be doing from now on until the market touches here is just to look for sell opportunities. Now, if you open this chart a bit, you see a pattern that this thing is forming here, and this is the head and shoulder pattern. So it just tells you that this market will, as it's a touch here, it will do a reaction somewhere around this place. And what will you see to keep tanking down till it gets here? So can you see, just from the monthly time frame, you have a broader view. So when you start going to the lower time frames, you might see buy opportunities, but your priority should be sales, because this resistance is strong and the market has never broken it in the past many years. So you just follow the trend. Do we understand? Are we understanding? If you're following me, drop one on the chat, please. Okay, nice. So the market is consolidating from a higher time frame. So if we go to weekly, let me clear what I have done. So let's go to weekly time frame now. Now, weekly time frame is opening up many other things that we can see here. So first of all, we can also draw a trend. So the thing is, what we have analyzed from the higher time frame, don't forget it. The market is still on a massive sell. So this is a trend line that we can draw from here. From the weekly perspective, this market is on an uptrend. That's just catching this from this start point here. So this market is on an uptrend. So there is not much information you can get here. Although you can say you want to draw your level here, because the market has touched here one, has touched here one, has touched here the second time, and it has touched here again, this other side, it's touched here again. Okay, why is this tool not picking up? It has touched here again, and most likely it might touch here. So we have this 1, 2, 3. So you can draw here as your resistance level. If you choose, you can also draw a support level from here. Why are you drawing a support level? So what makes your support level, resistance level accurate is the number of at least 2 touches. So the more it touches on a point, the more stronger it is. So remember, we're only dealing with this phase here. So this is what we have, right? Not so much details. So now your main work starts from the daily time frame. Your main work starts from the daily time frame. So when you open the daily time frame, you can see that you can still draw. This is what we call multi-time frame analysis. So you are breaking the market down from the higher time frame to the lower time frame, right? So here, we start from this point to this point. We can see that the market is still on an uptrend, right? It's still on an uptrend, but we know that there is a strong resistance level here. There's a strong resistance level. So there is every opportunity that as the market has bounced off on this trend line, it's going to hit to this resistance level, right? So it's an assumption, because the time price hit that low we saw, this level, anytime, okay, for example, the last time price, see from here, when price broke this, it touched this level, came back here, it touched this level, came back here, it touched this level. So technical traders believe that what have happened in the past can also replay itself. So now that the market has touched there, we believe that it will touch to this resistance level. So On a daily time frame now, you're looking at a buy opportunity, a seemingly buy opportunity. And again, following structure, the market has made a low here, has made a high here, has made a low here. So it has broken this high to make a new high, and it has retraced. So we are expecting a little push up. You see, you are combining structure, you are combining support resistance together. Now, overall, we know that this market is on a downtrend from a higher time frame perspective, and it's already formed that structure which we already saw. And what we should be expecting is a massive drop, continuous sell. So if you are a trader now, so you go to your 4 hours and you want to take a trade, you see, just like what Mr. Simeon said, if you go to lower time frame now, you see that there is a level here. Don't be tired of drawing your levels. Because for each time frame you open, there are levels. So here, the market is also consolidating. If you see, it's consolidating, right? So it's just making high here, low here. It's just entering within this. Okay, I think these lines are too much now. Let me delete some of them so we don't get confused. Okay, so from the 4 hour, this market is consolidating, right? And consolidation shows you that the market is building momentum. Each time there is a break of a consolidating market, so the market is forming high, low, like this, it's just consolidating. Just know that the market is about to make a very massive move, either to the upside or to the downside. So you are not sure yet, you are waiting. You are not sure yet of what the market will do. So although you can trade consolidations, right? We've discussed about this before. You can always take a trade, you knowing that this is a solid consolidation. For example, now, a sell here will not be bad to this downside, but is it worth it? That's the question. So definitely this market will bounce into this region, right? And either bounce back to this region. But our strongest bias on this market is a sell. So at most, we should be looking at this market will break to the downside. Why? Because of what we saw from the higher time frame. Remember, this region where the market already is, from the higher time frame, is already on a resistance level. So we are not expecting the market to go higher than this, which is now, if this, for example, if the market breaks above this level, so we should be expecting that the market will push up from here, maximum to this point. Why? Because if you check the higher time frames, this resistance has not been broken for a long time. So even if the market breaks this consolidation now, it will touch up this, then it might, well, we don't know. Anything can happen. News events, economy changes, president changes, anything can happen. But we don't see that happening in this. You know, one thing with some currencies is that they have stability. They have stability. That's one thing you should know. That's why I told us in one class that if you are trading any pair, you need to be familiar with the economic situation of that country. If you notice, Australian dollar is a very stable currency. Their economy is stable. How many times do you hear about news of Australia? This one happened, that no, their economy is stable. Very stable. So it also affects the pair. Please give me a minute. Just give me a minute. Okay. So if you have a question, please let me know right now. If you have a question, let me know. Okay, there is no question. So analyzing this now from this 4 hour. So this is what the market is saying. So if you drop down to 1 hour now, right? Let me clear off all of these joints. So if we go down to 1 hour time frame, remember on a 4 hour, okay. So let me restore some of the drawings so that we'll understand. So from the 4 hour now, this is why I said we could actually take a short sell, but it wouldn't really make sense for you selling from here. How many pips? Wow, it's 50 pips, so not bad. So here now you see that the market made a double touch. Yeah, it's a double top rather, double top. So it's like an M pattern for a sell to this downside, right? So on a smaller time frames, the idea is for you to catch quick trades. Quick trades. When you're breaking the market down, it doesn't mean when you see sell on a higher time frame, then you must come down to a lower time frame to sell. So if per se you want to take a trade now, you can see brief opportunities for you to sell, but you need to know where the sell will end. That is why you do your analysis from the higher time frame. So with all of these things we've done now, we know that if a sell continues, at most it will stop here. It won't go beyond this level. If it breaks it, that means the market wants to continue selling. So on a 30 minutes time frame, you still see even more reasons why you should sell. Right? It will give you more confirmation through the candlestick behaviors. So this is an M pattern. And from a higher time frame, this is actually like a kind of head and shoulder pattern here. This is the shoulder head. Now there's a there's a kind of head and shoulder that forms, well, this you observe it by yourself when you are trading. There's a kind of head and shoulder that forms a W pattern head. A W pattern head. That one I have observed it many times. It's not always just straight. Sometimes it forms, in fact, is a more solid confirmation. Gives you shoulder, but the head is M pattern, is very strong one. So from a 15 minutes, which is your execution now, since this market is like this, what would you want to do if you want to sell? At least let this head complete from this point. So you are waiting for the market to come to this region in order for you to enter in for a short sell. So you can enter here, target for how many pips? 61 pips, that's not bad. Then you put your stop. You can put your stop here, which is 35 pips, not bad. That's 1:2, but it can be is too high. You can reduce it a bit. You see, this is how you take trades that are almost zero pip SL. You can actually put a trade here with 8 pips, then increase your lot size to catch almost 65 pip movement. So do we understand this? Do we understand? Drop 2 on the chat box, please. If you understand perfectly well this analysis, drop 2. So this is if you want to take a very short trade. You don't have to really wait for market. You can break it down and know where the market is going and know where it can stop. Two-ish. What do you mean two-ish, Moses? Do you have a question you can ask?
I understand the pattern. It's just when you sorry, when you started talking about the PIP stuff, maybe because I've not exposed myself to it yet, but your explanation was understandable.
When I started talking about what?
PIP, sir.
Oh, pips. You didn't know. Oh,
I understand the PIP, but how you were getting this is 50 pips. Stop at in. I don't know if you get my. I
okay.
wasn't.
All right. Abel, do you understand? Mr. Leon, I need feedback from you guys so I can move on. So this analysis, you can do it with any pair. You can do it with any pair. Same information, same ideas, same understanding. That is why I gave you guys different pairs. So I will do it with a crypto pair, but when you guys are done, this class might be a bit extended, but if you guys are willing, we can stretch, but if not, it's fine. Now, yes, I will do it with a crypto pair. So for Moses, see, the market moves in pips. For example, if you check here, just notice this guy here, this movement here. You see that the number keeps changing. It's 56, 64. You see, anytime it buys, this line changes to green, right? That means it's gaining. Anytime it sells, the line changes to red, which means it's selling. So just observe it. So 68 is going up, 67 a bit down, 63 going down. Just check but this is peak movement anyways. This is peak movement. So the market moves in pips. Now, for any place randomly, you can see this tool here is a measurement tool. So you can pick it from a point to another point, and it shows you the peep movement. So exactly 51 peep movement. For any pair is the same. So you use this to measure the amount of peep you'll be making if you take a trade. So it's just this ruler tool you can use. Just use it anywhere, measure. It gives you the peep movement. It tells you the bars it covers and the percentage. So again, this short tool, you can get it from here, from here. Sorry, from here. So you can get it from here. This is your short tool, short position. Okay, short means to sell, is the same. To short means to sell. To long means to buy. So short also means bearish, long also means bullish, all the same, just different terminologies. So when you pick up this short tool, that's for selling. You can put it at the place where you want to sell to mark out your SL. So for example, this shows you the peep you are risking. Somebody has a chart. For both buy and sell, the ruler tool, yes, please, for both buy and sell. So if you pick the ruler tool, if you take it from down, up, it shows you buy. But if you take it from up, down, it shows you sell. That's just the difference. So this, your short tool, it measures your pips, which you can see here, 45 pips will be your gain. Then your stop loss or your loss in case this trade goes against you. So it measures 20. The reason why you have this is because Forex, don't worry, the next topic is risk management. So you will now understand why Forex is a business that you can calculate your risks. Your losses is your choice. It's not the market's choice. When we teach risk management, you will now understand why Forex is very balanced. For example, these 20 pips now, if you calculate it in terms of, okay, just give me a moment. Okay, let me just say this. I think you need to go watch video. You know how you as a human, you take one step, right? You take one step, take two steps, take one step, take two steps, and you're moving forward. Just see your steps as the market movement as well. So as a human being, when you take a step, right? You take one step and you take the other. Now, there is a gap in between your steps. Let's say is like, for example, let me just use one. Let's say is 10 feet in between your one movement, right? So each time you move, take a step forward, you make 10 feet in between that movement, right? So it's 10 feet. So this is like 10 feet, 10 feet per step, the space in between one step and the other. So human movement is calculated, car movement is calculated in kilo, in what now? I don't know. It's escaped my mind. Any movement is calculated. Kilometer per hour. Yeah, thank you. I'm thinking my brain. So kilometer per hour. So the market movement is also measured. Your step as a human is measured in feet. The steps of the movement of a car, steps, you can say steps, is measured in kilometer per hour. Anything movement is measured. So the movement in the market, as this number is moving from 6 to 5, is the step. Now, the reason why you need to know this is that in Forex, the step is not in feet, it's in dollars. Now it's interesting. I don't call dollar. Moses here don't stand. So let's say one step movement for this pair is like $5, 5 USD, right? Each time the market takes a step is 5 USD. So you'll be able to measure the amount, first you measure the peep movement, 45. Let's say this is 51 peep movement, as you can see here. So 51 peep movement. This does not translate to anything to you until you understand what is the value of a step that this market takes. So let's say if this market's one move is $5, how do we get it? We just multiply what we have. I can't find this cross sign on my keyboard. What do we do? So let me just use X. So let's say we are multiplying it by 10, right? So this will give you the money that you should be making in the market, right? So how much should we have here? The mathematicians, how much should we have here? 51 times 10.
510, sir.
We have 510, and that will be USD. So Moses, now, if let's say you are buying from this point, from this blue line down here, and the measurement is 51 pips. If this pair, because the pip movement and value for each pair differs. Although somebody sending a message, how do we determine the value of each peak movement? Good question. There is a standard. Moses is drawing us back like a snail. Jeez. Say watch video, you know watch video. Anyways, it was not really explained in details. It was Mr. Simeon I really explained this thing to him. How do we determine the value of each pip movement? Okay, so this is really, really far behind you. Okay, Moses, let me show you something. Just a moment. Let me get a diagram. I'll use it to explain. And again, you don't have to do all these things yourself. There is already a calculator that calculates this. But since you asked, let's give you the knowledge. The knowledge. First of all, I'll show you some series. Okay, I need to stop sharing so that I'll share my entire screen. Okay. So first of all, let me explain this before I show you, I answer your question. Now, this is Euro USD. First of all, they have PEEP, they have pipet. Pipet is like seconds, right? This is like minutes. So if this measures, for example, 60 pipet, it will make 1 pip. It's not exactly the number, but just have it as an idea. So now, the yellow guys you see are the pipettes. So usually when the pipette measures up to 10, it makes 1 pip, which is this. This is the pip movement. So for pairs that have 4 numbers, please, this is very basic, just pay attention. It's very simple. For pairs that have 4 numbers after the decimal, right? Their pip is the 4th number after the decimal. 1, 2, 3, 4. Maybe you do maths, you do quantitative reasoning. This is basic. That is for Euro USD, GBP USD, all these pairs. If you notice, JPY pairs have just 3 digits and also 2. For example, this pair now we are checking out. You see this? Because it's a JPY pair. So they have 3 numbers after the decimal. So come back here. Now, for pairs that have 2 numbers or 3 after the decimal, their pip movement is the 2nd number, 1, 2. Right? So when the pipette reaches up to 10, it makes a pip. When this pip makes up to 10, it also increases to this. Now, this is like 100 tens and unit. 100 tens and unit. 100 tens and unit. But the difference is in gold. Gold is different, and BTC USD. Some of those commodities, their own pip movement is different because they have higher numbers too. But it's still in the category of this. I mean in terms of the decimals. But don't confuse it, it's still the same idea behind it. Still the same idea behind it. So only when this pip moves, you gain money in the market. So the real money you make determines how much this pip moves. Because this pips in itself, it has value per movement. value per movement. So let me find that other this thing I'm looking for. Let me see if I can find my guy. There is no need you. Yes, this is it. So if you can see this, let me open it in a new tab so we can have a image. Oh no, that thing just happened right now. Okay, let's stay here. Let me see if I can zoom in. No, it's not possible. Okay, now Moses, see your lot size, just like Mr. Simeon answered you, lot size in the chat. Lot size is what determines the amount you make per pip movement. So we have standard lot, we have mini lot, we have micro lot, we have nano lot. This has gone to extinction because most brokerage do no longer provide this. It's too small to do business. Now, me and you, let me come to the chart. Both of us can enter a trade, right? Both me and you, both of us entered this trade from the same point, and we took profit at the same point. But what we gain will be different. And the reason is one thing, just the lot size. Lot size. Where is my text? Okay, let me edit this one. I don't know what's happening. So there's something called lot size, which I believe you've been taught. Lot size. So this lot size is what determines what you will gain from the same trade we took, same position, everything, right? That's what will determine what you and I will gain from the same trade. So let's come back here. No, we're done with this guy. Now, if you use a standard lot size, it means one lot size. Now, if you open your MT5, Aish, oh, this teaching now. If you open MT5, you will see lot sizing. Okay, let me do justice so that we will really understand this. I really want us to get it. It's basic, but it will build your knowledge on Forex. So you have your lot sizes. The standard lot size is from 1. So anything counting from 1 above 1, 2, 3, 4, 5, they are standard lot size, right? So if you take one step with one lot size, you remember I said PEEP is like a step. I'm using that ideology so that you understand it. So you use one lot size and you take one step. Each one step will be $10, right? So in this case now that we have 51.2, let's say 51 pips, right? If we multiply that 51 times 10, it will give us 510. So if you use a standard lot size, from that trade now, you'll be making $510. So the person who used a mini lot is using 0.1 lot. The 1 pip movement is just $1. So that person on this same trade will be making just $51. You see the difference? To make matters worse, the person who uses micro lot, he will be making about, is it $5.1 or something like that, if I'm correct. So the pip movement, somebody's sending a chat in the box. Okay, yeah. So the pip movement determines the amount of money you are making. Sorry, your lot size plus your pip movement determines the amount of money you're going to make. So this lot size, you will always be asked before you enter in on a trade. Moses, I think I've done enough explanation. You should understand this. Let me know. Drop one on the chat if you understand so far. Drop one on the chat. Let me. Okay. So if that is, and loss is also, sir. Okay, yeah, so let me not give you sweet thing. See, Moses, or everyone, as much as you are happy making 500, if this market goes against you, it's the same calculation. It doesn't reduce. So you will do 20 times that 10. You understand? So the same way you are gaining is the same way you are losing. It's the same calculation. The same calculation. So if you want to calculate your loss, you will do 20 pips or 20.2 times 10. If you are using standard loss, you do times 10. If you're using mini, you do times 1. If you're using micro, you do time. It's the same thing. So this is sorry. So now, this is the sweetness with trading. You can choose to reduce to 10 if you don't want to lose much. It's your choice. But again, the trade can still go against you and still go your direction. So if you say it's 10, 10 times 10 will give you 100, right? So the person who, let's say, is entering this with a standard lot size, with one lot size, which is $10 per pip movement. So if the market goes against him, he will be losing $100. So, and I think it's a good risk for you to make. You are risking $100 to make 500. It's a good business. What do you think? It's a very good business. So I'm already diving into, yes, Moses, speak.
Yes, sir. Sorry to make you digress. Concerning the lot size, so why would anyone go for anything lower than a standard lot? If I don't know if you get my, since that's the one producing more money, although you will lose also with the same amount.
Good question. Now, trading is a very risky business, very risky. You can lose $100,000 in a split seconds. Eh? In a split seconds, you can lose $100,000. And the market is not going to pity you or say, yeah, sorry. No. So this is why, for example, you don't come into a business and the aim of you going into a business is to make money. Secondly, you would want to stay in business as long as possible. So it is okay. For example, this one lot size, I know a trader who uses 100, and I've shown us here many times. This is even small. Traders use 100. So what will you say about those guys? Right? But the truth is that for you to manage your trades, especially for those with small resources, you need to use lot size that are lower. Now, this lot size works with what we call leverage, which I think we have already covered, right? We've covered leverage. Now, let me explain a little bit. It's good, sure. Anyways, what is something we still needed to handle. So there's what we call leverage. And leverage determines, when you start breaking this thing, it's plenty. I know we say lot size determine the peak movements and all of that. But there's something called leverage. The leverage also determines how much you make. Now, let me explain. Brokers give you leverage to trade, right? They give you leverage to trade. And their leverage starts from maybe 1:10, 20, 100. This is standard for prop firms. All prop firms I've seen, they use this as standard. Now, when you are trading with a live account, brokers can give you a leverage of up to this amount, 1,000, and I've seen 2,000. This is the highest I have seen. Now, what this leverage means is that the percentage on this side is multiplied with the money on your account. So let's say you have $100 and you are using a broker that gives you 1:100. 1:100. So in real sense, behind the scene, you are multiplying this. So it's like you have $10,000. It's like you have, am I correct? Is it $10,000? Yes, I think so. So it's like you have $10,000 worth of ability to trade. Now, coming back here, let me show you something. There is something we call units. Units. Normally, if you want to trade with one standard lot, you need 100,000 units of the currency. Let's say it's GBP, USD. You need 100,000 units. Straightforward, you need about $100,000 to use one standard lot. Do you understand? Normally, that's why the Forex market is not made for retail traders like you and I. But that's why we have to work with brokerage or brokerages. These brokerages are the ones that cover up the other sum that you need to trade. Usually, the Forex market is made for big banks because they are the ones with the thousands and the millions of dollars to enter the market. So in order for you to trade now, in a standard law, you need at least 100,000. Then if you want to do minute, you need 10,000. Then if you want to do micro, you need 1,000. But most traders don't have these resources. That is why brokers are there. So this is how it works. You can come with your $1,000 and your broker will give you leverage of 1:100. So you multiplying this 100 with your 1,000, you almost see that you already have the 100,000. This available to enter one lot, although your account is just 1,000. Do you see the wisdom and the logic behind it now? Now, if you come back here, the higher the leverage from 100, 200 to 1,000, 2,000, the higher the leverage, the more you lose money. Because as much as this is multiplied with what you have to make more gains, it's also multiplied with what you have to lose more. It's as simple as that. So they don't reduce the risks of you losing. Now, if you have traded with a prop firm, they give standard of 1:100. Now, you can make $100 with, this is an example, 50 pip movement. And your lot size is one standard lot size. I'm just giving an example. But if I am trading with the same lot size, same $100, same 50 pip, and I'm using a leverage of 1:1,000, what I will make, let's say you made 500 from this trade. What I will make is a difference of 1,100, which is 10. So I'm making times 10 of what you are making here. I just felt I lost so many people. I drop one if you understand. If you understand what I'm saying, drop one, please. Okay. Mr. Leon needs further explanation. All right.
Yeah.
Let me go over it again. There are many factors that determine the amount of money you make from the market. Many factors. One is your lot size, the peak movement. Another is leverage. You know, I told you leverage is, let's say you want to buy for example, because of course you are buying an asset. Let's say you want to buy an asset for 50,000 bucks, right? And you only have 10,000 bucks, right? Of course, you know you can't buy this asset because your money is almost 4 times less. So this is where brokers come in. Brokers says, don't worry, we'll give you 40,000. But this money is not given to you like life. It's not even seen. Everything works behind the scene at the back office. So brokers say they'll give you 40,000. So if you make money, they gain. If you lose money, they don't lose. So they are telling you that they are going to give you 40,000, right, to buy this asset. So when you now make gains from this asset, they take their commission or profit, right? So in other words, they are empowering you with the resources that is not yours to trade. But in real sense, this is how it works. Just hold this that I have explained. In real sense, this is that it works. In real sense, this is how it works. Let me explain a little bit more. So what they do is, when you have $100 account, life account, this is dollars. So if they give you a leverage on the system, maybe they give you a leverage of 1:100. This $100 you have will be multiplied by the leverage that they give you. Oh, I put 1,000. Let's put 1,000. So this leverage they give you will be multiplied by the original money that you have. So this will make like $10,000. Remember, I showed you here that in order for you to take one standard lot, you need $100,000 to take one standard lot. For you to take one mini lot size position in the market, you need at least $10,000. So now, normally with your $100, you can only take a trade, okay, 100,000. Sorry for the 100,000. One more zero and a comma here. Okay, so with what they have empowered you with now, you can take a one standard lot size trade because you came with your $100 and they gave you a leverage of 1,000, so it will be multiplied to make 100,000. Now, normally, with your $100, you're supposed to take this. Yes, this is what the peak movement, and this is your 100 units. You're only allowed to trade with 0.001, which is very low. And for each pip movement, you are making 0.1 cents. So for how long will you trade this to make reasonable amounts? That's why they give you leverage. So the one who has been empowered with leverage comes into the market. Let me delete all this. The person comes into this market now and he wants to trade, right? So this is how it works. You use one standard lot. Remember, behind the scene, you have 100K, right? You have 100K. Then you use one standard lot to enter a position. So you enter a position, maybe a buy position. You bought GBP USD, right? Let's say you bought GBP USD. Now, each pip movement for one standard lot, this one standard lot is $10. $10. Now, what you don't understand is, as you are making profit, this 100K is supporting you. But if you are losing, the prop firms never lose. This leverage they give you, this leverage they give you, they cannot lose from it. That is why we have what is called margin call. Margin call is when, let's say you are trading with your $100, even if they give you $1,000 leverage. Once the money gets to, maybe you are in a losing trade and the money gets to $85, they'll automatically trigger a stop. Why? Because they don't want this their leverage that they gave you to be affected. So in the real sense, when you are losing, the leverage is bad for you. But when you are gaining, it's good for you. So the pip movement is $10. So imagine that you are in a trade where your stop loss, remember, one pip is $10. You're in a trade where your stop loss is maybe 15 pip. 15 pip. And you are using leverage of 1:1,000. Remember, it's $10. Now, if this market moves 2 pips, you're already out of the game. If it moves 2 pips, you are out. And guess what? You are going to be losing about $15 in that market. Do we understand? So leverage is good. That is why you minimize your lot size and the leverage that they give you, so that even when you are losing, it will not be so much, because in Forex, your eyes should be on what you are losing more than what you are gaining. Your eyes should be on what you are to lose more than what you are gaining. First of all, you didn't bring any money into the market, so protect your capital. When you are sure that your capital is protected, then you can now make money from the market. But if you are careless with your capital, you will lose, and you keep putting money and you keep losing. So this is why some other traders will go for a lower lot size, even if it looks as though it doesn't pay quickly. But you go for a lower lot size because you want to trade for a long term. For example, if you have $100, you can divide that $100 into 10, and that will be $10. So you can, if you divide it into 10, that means each pip lot size, SL, that's stop loss, is 10 pip. That means for each 10 pip movement, you are losing just That means if you are using, if you are using this mini lot size, that means for each 1 pip movement, you are losing just $1. So if it gets to 10 pip movement, you are losing $10. So do you see that you need to take 10 bad trades, 10 bad trades for you to lose your $100 account? Instead of using 10 pip movement, right, times 10, which is equal 100. So if you use one standard lot, if this market moves 10 pip, your whole $100 is blown. But if you use 0.1, which is mini lot, if this market moves 10 pip, you only lost $10. So you are still in the game. So this is risk management. You want to trade long term. So if you bring $100 into the market, at least trade it for 1 month, not just with one trade, you blow it. So these brokerages will make you see that leverage is good, you make more money. No, as you are making more money, you are losing as fast as possible. You are losing as fast as possible. Okay, so Mr. Leon Moses, do you understand this? Moses raising hand. Oh yeah, talk now. Speak.
Yes, sir. Just to see if we heard what you said very well now. The brokerage that provides the leverage for you. So basically, you have a small amount, but to gain a certain trade position, the brokerage will support you to get that trade position to be able to trade. So now, if you are making money, everything will be okay. But if you are losing money, let's say you have that $100 now, and let's say you have already set your stop loss to, let's say you said 2 pip. So in that 2 pip times by 10. No, yeah, two pip, if I'm correct. So my basic question is that if you are already losing, by the time you've multiplied it, everything, you're already losing over the $100 that you have originally, besides the leverage. Even that the brokerage will now stop the whole thing, right? They won't allow you to lose more than the 100 which you had originally. Is that that what I'm
Exactly.
trying to confirm?
This is what most traders don't know. They think the money is there for them. They won't allow you to lose your more than your original $100. In fact, when it gets to 85, 90, they automatically stop the trade, even if your stop loss has not been taken. That's what we call margin.
So they have wiped out your money and you just be there
Exactly.
crying. Okay.
Exactly. So don't worry, we'll go full details into risk management. Are you guys still on this class? Do you want us to continue?
Yeah, the crypto one.
I'm fully in as long as
All right. Yes, Mr. Leon.
Yeah, the crypto analysis one. That part, I believe I get it.
Come again.
Crypto analysis, using the same analysis using crypto.
No problem. You want me to do it, right?
Yes, yes.
Okay. Before that, let's finish. Is there anybody raising hand? Abel, yes. Let me hear you.
Yes, sir. It was the same question I had that Moses asked because I actually typed it in the group chat, but there was no response to it. So it's more like, well, it has been answered already, though I understand it now. Like if you have, let's say you have $100 in your account to spend and to take trades and all, but by the time, let's say your loss now is not greater than, well, it's supposed to be greater than, but your broker came through in a good and a bad way.
Okay. Now, let me say this here. there is something called risk to reward. If you click on this, your short, you see here, risk to reward ratio. Now, before you enter in on any trade, your risk to reward should be at least 2:1. For example, this peep here for the lot, let me shrink this. Did you see this trade we entered? It came here. I don't know if there's any news, but you see, the analysis we did, although it didn't get to our region, but it will drop massively. Wait, let me see something. It's like there is a news event, the way the market is moving. Today is Friday. USD 330. You see, this news, Euro USD, but this is not the pair now, but it's affecting this. I'm surprised. We should have a news for USD. Okay, let's check. But this movement is strange because it's all the JPY we're checking. Okay, everybody open your GBP trade, GBP USD trade. Let's see. You should see a movement now because this is a major news. Gosh, I don't want to close this chat. Yes, somebody give me feedback. What are you seeing on GBP USD? Is there any strange movement? NFP. NFP is non-farm payroll, is a major news.
It has risen.
What has risen?
GBP USB.
Gosh,
There's others.
look at this. Massive, massive. This is the this
Jesus.
this is
So now money become miss like this.
Hey,
you see the you see the
This
impact
one.
of news.
Jesus.
You can see here that. Okay, how do you interpret this news? This is it.
The difference between the previous and the actual is high.
Jesus is Lord.
So it's the change in the number of employed people, right? Now, this figure is lower. This one is higher. Shouldn't it be selling? You get my question. Now, this buy is
It's true, sir. USD should actually be gaining
why?
for for it to be selling.
Okay, now this is how you interpret it now. Previously, the number of unemployed people was 14K. Now you have 73 people who are unemployed. So it's bad for USD. Do you understand what I'm saying? So you need to learn to interpret news. Sometimes the figures are higher, but the interpretation is learn. Yes, Moses.
Yes, so out of where you are now, out of this, I know that the red icon means it's very impactful news. So out of these four, if I'm correct, red icons for USD, how do you know which particular one? How do you know that is the one affecting the chart specifically out of the four? Because I'm seeing four news from the red.
No, Moses, wait. These things are released at once by 3:30 p.m. These three news released at once.
Okay, but you were specifically looking at the non-farm employment change. Then you
Yes.
forget. So why were you pointing towards that? Is there a reason
Oh,
you
okay.
targeted
Okay.
down?
I get your questions. Now, this one, if you read there, it says average hourly earnings. Average hourly earnings, right? And all the unemployment rate. So the unemployment rate, the two key things you should check for is the rate and the number of unemployed persons. So before it was lower, the people who were unemployed were lower, but now it's higher. This is the first thing you check, the rate and the number of people who are unemployed. So it increased to 73K people, higher than this, the previous one. So these two are key. Actually, all is important, but see, if this one is lesser and this one is even like 13K, actually it cannot be because it contradicts the percentage. If this one is higher in any way, this percentage will be higher. So is this number that determines the percentage? So this is how news impacts the market. This buy, it will keep buying like that for long. It will just keep going. I've been anticipating this buy, but I think traders were waiting for NFP. Traders were waiting for NFP. So you see, whenever you see a movement like this, the market is not balanced because it's an activity of buying and selling. But one aspect is just somebody left, Mr. Leon. So this buy might get up to this level here, but not immediately, but it might get up to this level here. I've been anticipating this buy for long. Let me see where we entered trade that other time. Yes, I was expecting a buy from the, that was why I sent that trade that other day. So expect this buy either to this region or to this region. Then after the buy is done, expect another massive sell. But generally, this is how news impacts the market. This is how news impact the market. You just see a massive bar. Let me measure it for you to see. So far, within the space of split seconds, this thing has made 100 and so if you are using one standard lot now, how much will you be making?
1,310.
Exactly. In within the space of just how many minutes? About 9 minutes.
Yes, sir.
Yeah.
This is how trading can. So imagine somebody using 100 lot size. So you multiply this by 100, you'll be making crazy money.
You don't buy house with that, okay?
Exactly. So trading is that. I think we should stop here for today.
Ah, no, sir, no, sir. This is this is the most productive class I've had so far.
Oh my God. Look at this, it's massive. Now, note that the impact of news event is long term. This is just the activity of initial traders. Now, what you see next is a massive drop. But because you are trading economy, this event now that was released is for a month. It's for a month. So expect GBP to be buying. Okay, now you can toggle news events on your this thing. This is news event. If you click it, let me show you something. Now it shows you, and there is one that shows month per month. No. Okay, let me see. Okay. I think it's the other one that does month per month, but NFP is released every first Friday of a new month. First Friday of every new month. First Friday of every new month. So you will see a massive drop because as much as this is just the initial gara in the market, yes, you see a massive drop because sellers will take advantage of it. Then what you will now see in the long run, because US economy is not, I wouldn't say it's not good, but temporarily they have more unemployed people, is bad for them. So what you'll be seeing is that GBP will be gaining massive push-ups, at least for this month. Now, although traders still determine what happens in the market, but following this news event, this is what you should be expecting for GBP. So most traders now are cashing out while more are putting in more money. But normally when there is a spike in the news event, what you see is a massive retracement. Sorry, a massive retracement. Then the market will now reset to continue the normal impact of that news, which is that GBP at this time is stronger. GBP is stronger. Okay, so I've been talking. Moses, let's go. You will continue this class if you guys are interested, but open your own chart and let's analyze the market. Moses, share your screen. We're waiting for you. So we should be looking out for more buying opportunities for this month. Most probably, because that's the way fundamental news works. So that means US will take, well, I'll talk, but Moses, share your screen. Let's go.
Sorry, sir. My laptop just froze up. I'm trying to share. I don't know if it's showing now.
Yes, we can see.
And so this one is similar to the one you were using as an example. As you were teaching, I was just marking out similarities to the example you were using from Bro Simeon's zone, where we can
Close your this thing. Let's see. Oh yeah.
Is it okay now, sir?
Yeah. It's fine. Let's go analyze from top down.
Okay. Let me see. So this is the monthly time frame, and we can see where it starts. Right now, I can say that the market is consolidating because from the two support from the two listing which I drew here, you can see that it has not exceeded this, it has not gone beyond this, and we have 3 touches here, we have 3 touches here. So we still expect this to either touch this and retrace back up, or once it breaks this, we can still expect it to touch this place, but still not break this support line. Yeah, this is called support, yes. So that's my own analogy from this one. I don't know if I was clear. So let me repeat myself again. So this right now, the market is consolidating. So as you can see, I drew to indicate that it has just gone up and down motion. It has not passed this support line, does not pass this resistance line. So we expect the market now to either touch this support and bounce back up and continue the consolidation trend, or it breaks this support, but we still expect it to retrace back up because we have seen that it has never gone past this support line. So that's my own that's on the monthly time frame. For the daily time frame, sorry.
So two things are really important when you open a chart. Support resistance, and I think Mr. Destiny taught us that support resistance, then your support resistance can be key levels, then your structure. Structure has to do with uptrend, downtrend, highs and lows. So, okay.
Okay. So sorry. Yeah. So right now, we can see that the market, let me just draw, sorry, just try this. The market is on a downtrend, not on a downtrend, was on a downtrend, but it seems to be retracing back up again. So let me see if I can get the resistance. So yeah, I've tried to indicate the support and the resistance line. So we can see that the market right here, where it is now, we expect it to bounce, retrace its step back up again because it has already touched the support line. So we expect it to bounce back up and to touch this or to eventually meet this resistance, if I'm correct. So now, if I were in the market right now, I forgot to mention this for the second one. So for this one, if I was in market now, I will look to buy just to make, I don't know if it's significant, but we can make some money here according to my analysis. So we expect it to continue the pattern to touch this resistance. Let me try and make it visible. It's not even properly. Yeah. So we don't expect it to go beyond this line. Well, this is not even a resistance per se. This is not correct.
Wait, Moses, you are right. Wait, calm
Am I
down.
right? Because I'm not seeing, let me explain, sir. I'm not seeing, I don't know, you said it has to be more than one touch. Maybe because I've zoomed out, but there's only this part here I'm saying that has, like this one now, we can see multiple instances where it has, sorry, let me indicate.
Now,
We can see
that
it has
your
touched
chart is
here.
very sweet.
Okay, sir. Let me leave it in. Let me close.
No, no, no. Don't
Okay,
close it. Keep on. But see, let me show you something. See,
okay.
this region now has been okay. There's what we call zone. Zone is where you have multiple activities of touching, touches. So, for example, the market touched here. 1, 2, 3, 4. Now, the market broke this resistance and it has come back into this zone to form 1, 2, 3. There's more likeliness that this market will keep buying. And the reason is because this support has become resistance, or this resistance has
Okay.
become support.
Yes,
The
yes.
interpretation of these three touches here means that the market tried to break it once, it didn't. Tried to break it the second time, it didn't. Tried to break it the third time, it didn't. So there's more likely, even drawing your trend line, there's more likeliness that the market will start buying from here to the upside. So
Okay.
go on. You are on the right track. Just go on.
All right, so let's see the 4-hour time frame. Hmm. Hmm. We expect, I expect the market, so from, let me try and do analysis. We have, sorry. We're now expected to shoot that. Hmm. I can say that for in this zone right here, I can see that the market, should I call this consolidation? Although it's very small, minimal, we can see that the market was literally just going up and down within the same zone. So there was not really any uptrend and downtrend yet. So now I expect the market to continue on the uptrend because as we can see, we have, I thought I saw something here. Sorry. Sir, for this one, I just believe that since we have a downtrend here and we had, I'm trying to see if there's this drawing you sent to the group last week for the different chart patterns set. So I was trying to just see if there's anyone that it looks similar to one, but I don't think it's the one. So I don't know. I just feel like we should buy, but that's just the gambling. So let me just say I don't have a proper analysis for this, but that's just gambling. Like I said, that the market, this
No,
part here is consolidating.
This is this is triple touch or triple bottom. Is a reversal pattern.
Where is it? Sir? Let me
Check
see.
the chart. Check the picture I sent. Check for triple bottom.
Sorry, I've it looks. Oh yeah, yeah. Sorry, I know that it's looking familiar. I wasn't getting the name. So yes, triple bottom. So like I said, we expect the market to retrace back up. Yes, and we have a resistance here. although it's not just one touch, but we have multiple touches. So we expect the market to at least reach this resistance. So we can look to make a small buy here. I think, yes, we can expect to make a small, yes. So once it touches this place, the market could retrace a step back, or there's a high likely chance that it will come back more than go up, because as you can see now from the previous chart, it's find it hard to break this line. So we're looking to make a buy here, and we'll put our stop profit here. So that's my own for this 4-hour time frame. 2-hour time frame. I think it's the same thing we're looking at. Buying 30 minutes.
If you take trades from 2 hours and
Yes,
your
sir.
stock is down here, do you know how many pips is that? You have to go to 15 minutes to be able to take a good trade. Go down to 15 minutes. Let's see what's happening there.
Okay.
So analyze this 15 minutes chart. Let's see.
Okay. He mentioned something right now. So we can see that this, according to what you just mentioned 5 minutes ago, any sudden drop like this means that the market is unstable or something, which means that we still expect the market to balance itself back. So we still expect this to retrace itself back up, because if we move, people will want to market to move to a buy position to retrace itself back, because this is too big of a drop, according to what you just said recently. So, but all in all, we still expect the market to
Yeah, like normally
drop.
when there is, the thing is that there are different kinds of traders, psychology when trading news. So most traders will wait when the initial massive candles have been formed. They will take advantage of the sell, massive pressure. Because see, trading is buying and selling, buying and selling. As you are seeing these long candles now, is imbalance. The question is, who are those who are buying this trade that these guys are selling now? I don't know if you're understanding. It's an exchange of buying, selling, buying, selling. If they are sellers, there must be people who are buying it. What they
Yes,
are
sir.
exactly.
Okay, so when those ones are losing, they want to quickly. Okay. I think I get the idea.
Yeah, normally when there is a news event and there is a push up, when you see that push up, the buyers will want to take advantage
Profit.
of this sell move. So you will see a massive rush of buyers. So if you notice now, the candle is already forming a wick. It shows you that buyers are entering, but they are not yet strong in the market. That wick you are seeing, can you open your chart to full? Exactly. So this week now is telling you that buyers are already entering. So how will you know that? Go to 5 minutes and 1 minute. Yes, you see, buyers are entering in now. Go to 1 minute. So this is what is happening. So buyers are beginning to come in. If you go to 5 minutes again, you see that they are coming in. Now, if their pressure is stronger, they'll push the market up. But if it's not strong, the sell will continue. So, for example, now some buyers try to enter here, but it seems as though I don't know yet. We'll just watch the market, but they try to enter here. Now, on a 15 minutes, If they have successfully entered, you see a massive wick drawn to the upside. But buyers are just waiting. That's the idea you should have right now. Thousands or even millions of buyers are waiting. So when they enter this market, right, because of that pressure, you might see that the market might move from here to buy. But originally, the fundamental news shows that USD is weak. So from a long term, the market will now start correcting itself, going normally without any pressure. So that is how it works. Okay, you can finalize in 5 minutes, so you can check the chart again. Moses, are you saying something? We can't hear you.
Oh wow. Sorry, I've been talking. Wow. I've been talking to myself. Okay, so I didn't know I was muted.
Why?
Yes.
That's
So
well explained, anyways. It's a nice one.
yeah, so the if we look back, we can see that the market has not broken this line. Even getting to this point, it has already broken a resistance. So we do not expect we've gotten the news now about the US dollar that will negatively impact the US dollar. So we do expect in the long run, we do expect the market, sorry, my mouse. Where are you? Where are you? Where are you? We do expect the market to go down, but because of the buyers, as Pastor explained now, that we enter the market, we expect the market to still retrace up small, but it will not break. There's a more likely chance. I'm confident that it will not break this level. Also, be backing with the news that we just got now from the news outlet that the US dollar will still eventually end up on the down. So, but if I was a trader now, I will be looking to sell, even though we do expect, unless you want to make a small gain from this place here, I think that will be in a small time frame. But in the long run, we do expect the market to be in a sell. So we will be looking to sell unless you want to make a quick cash here. So that's my own analysis. Hello.
Yeah, thank you. All right. Eba, are you ready? Let's
I'll
go.
try,
Eba,
sir.
share your screen. I will check this USD card. Just give me some moments. But Eba, share your screen. Let's go.
Okay, sir. Can you see the screen? Let's see. Can you see my screen?
Yes.
So yes, this is the Euro New Zealand dollar. From the monthly time frame, we could see, okay, here are my key levels. Gosh, hold on this. Here are my key levels. This was to, yes.
Are you saying something? Because me, I can't hear you.
Can you hear me?
And close the stuff. What is it called? Give us full screen. Click here. Oh
Is it
yeah, let's
full?
go. What did you
Yes, from, sir?
what did you click? Your this thing has disappeared.
You,
Double click on your screen.
is it back now?
Yeah, it's okay.
Mm. So yes, from the um monthly time frame, okay, I was able to mark some key levels, which is the resistance level here and Okay, I marked one of the support resistance based on this here. And okay, another one. Okay. So this, but while we were speaking about the consolidation market, actually, there was a bit of gambling here, consolidation here. They were just still deciding their fate and all like that. So from here, we see that from here, initially for me, before around that time, you said we should mark, we should do it before then or around then. It was kind of different here. So, but now it has changed. So here now we are seeing that this wants to break this resistance here, which is going on an uptrend, trying to break the resistance level here. So the bias now, is it bias? I'll call it now. We go from the previous chart shown here, we see it has not been broken. The resistance level up here, it has not been broken for a very long time. So I expect it to retrace back to where it's coming from. So but currently from the 1 month time frame, we are seeing that is an which market structure now would I call it now? Is going, it's like an okay, let's say it's uptrend market. I don't know if the structure is clear, but I do have like another, what's it called now? Chart pattern. Yeah, chart pattern for it. Like is I was thinking it's more of like bullish continuation. What is it called now? Ascending triangle. I don't know. I don't know if I'm right. That was why I drew these lines, although it's not properly drawn, but that was why I drew these lines here. Then I was and also for this is the support level. We see from the previous you see from the previous we see that previously the second support level haven't been broken. Let's call it. So that was my own analysis for monthly time frame, that the market is going to most probably retrace back because due to the previous chart, it has not broken this resistance for a very, very long time. So yes, sir.
Okay, so for a day trader, your monthly, weekly, daily is majorly as an overview. You just need to know, okay, where is the market at? Where is it moving to? What are the resistance level, support level? For your main analysis will start from 4 hours. Then 1 hour will give you an idea of your main trend. Then you take your actions on 15 minutes. Then you can monitor the chart to on 30 minutes, 15 minutes, like that. Okay, so are you done?
That's for the month. That's the monthly time frame. So
All right.
for the weekly now, where is this thing? Ish. Ish. Yeah, yeah. What's this? Yeah. Yes, sir. Before I continue, what was the conclusion for that, sir? Because I was like, is an ascending triangle based on the monthly time frame.
No, your chart patterns. Well, if you're using um, chart patterns are effective, I think, if you want to make like immediate move on the market from 15 minutes, 30 minutes. That's if you are trading on the go. But if you see, the truth is any pattern you see on a higher time frame is the accumulation of what has happened from the lower time frame. So if you see a chart pattern on a higher time frame, it's already formed. But on a lower time frame, it's more like it's still forming. You can take advantage of it. Um, Simeon, can you remind me the pair I gave you? Is Simeon there?
Check.
Simeon, can you hear me? Okay. Moses, your own pair is USD card, right?
Yes, sir.
Okay, USD card.
Sorry, I stepped away from the laptop quickly.
No problem. What pair did I give you?
Australian dollar JPY.
All right. Yes, Eva, go on. You have 5 minutes. Thank you.
Sorry. Yes, so from the weekly time frame, we can see that from the resistance up here, well, it actually broke it at this point, then it traced back again. Then it came back again, but it hasn't like completely broken it, stay forming there. Then a while before them, which we noticed, what's it called now? Um, a call, is it consolidating? Yes, consolidating, but a consolidating chart going on here. So from this week, from the weekly time frame, we expect that since it has not been able to break through the resistance pattern here, it should be able to retrace back.
Okay, go to 4 hours.
4 hours. Mm. In 4 hours, it has broken. It has
That's
broken
a
the
false breakout, though. That's a false breakout.
yes. Where's the did I drop this? It has yes from the 4 hours. It has broken the it has broken the resistant level and no, that's the previous chart, bro. From the current market now, it's still yet to break the one inside, not the one outside.
Moses, what are you buying?
Market is
I'm asking, like,
the
from where
market.
we are now, what position should we take as a trader from this market now?
Um,
All right,
where's this?
move to 1 hour. Let's see what's happening there.
Yeah, they're buying.
So your level is even there. So it tells you that you will wait if the market breaks that level.
So you make a move.
Yes, before you continue the buy, or you wait on that level if the market gives you a reaction before you sell.
And that is true because even from the left, you see that it hasn't broken it anytime for a while as well. So it has to hit the point first.
Because you are still on a downtrend. From this 1 hour perspective, the market is still on a downtrend. So there is a low and a high. See, there is a low here, and the market made a high. This is
Yes.
another low, lower low, because it's lower than this one. So it's making a high. It can be equal high. It doesn't mean the trend has changed. So from here now, it can drop even down further. So don't
Oh,
forget market structure.
okay.
Market structure. All right. So yes, Mr. Simeon, no worries. So let me explain something now. Maybe we can stop sharing your screen.
Okay.
So this is the trade we just saw, right? This is the trade we saw. Sorry. So this is the trade we just analyzed together on this pair that Mr. Simeon. Look at the massive move. So there are some trades that is risk free. So it doesn't even go your stop loss. So your stop loss is just there just for in case it is. Right? So this is how you analyze market, because we saw that head and shoulder, and this market will keep selling for a long time. So I really want us to get or understand perfectly well how you can analyze a market. So it will keep selling because why? We have seen it from the monthly, right? The weekly. From the monthly is forming this the pattern is forming. But we know what head and shoulder is. So this is the shoulder, this is the head. So it will form a shoulder, which most times is equal to this. Then it will drop. And if it's dropping, it's coming down to this point. So that's why we could take that trade. So Moses did I think USD AUD, right? If I'm correct.
No, sir. Canadian dollar.
Oh, USD CAD.
CAD.
So this USD CAD now. If you shrink this chart, shrinking it just makes you see the broader perspective, right? So if you shrink this, first of all, from this perspective here, right, we're on an uptrend, just from this perspective. And the market has made more like a tree touch here. So this zone is very strong. I don't know why the data is not showing. 2023. So 2015 to 2025, this zone has been. So you can also mark out, okay, there is a resistance point here. So when we go to weekly, we can see better what's happening. So as you can see, the same thing since 2016 up until this day, the movement of the market is just within a range. Similar to the last chart we did, you can still see this head and shoulder pattern forming here. This head and shoulder pattern is a reversal pattern, and it works very, very well with the market. So it's either okay, it's a reversal pattern rather. It's a reversal pattern. Then the inverse head and shoulder is for the down part. So you need to always know where the market is currently. So right now, I know that the market is currently on the second shoulder of a reversal pattern. So I should be expecting to sell, because we can draw the trend line from here. You see that it measures like this, because that's the characteristics of this pattern. That's why we sent the pattern to us. If you are confused on patterns, use the line. You see, when you use the line chart, it gives you clear structure of the pattern. So if we go to the daily now, let's see what the market is doing. As you shrink this a bit, you can almost see that the sell for this pattern has already kick-started, right? Again, from here, you can see that you are on a downtrend. From here, you can measure your downtrend. 2 touches at least. So this is the last touch you made from this point. So you can also put it in a channel. You choose to put it in a channel. Let me delete this one. So you can choose to put it in a channel. If you go to 4 hours now, everything starts making more sense. So this is where you are. So does it tell you that as it's touched here now, where are you expecting the market to come? Down. Is an expectation, right? You are just analyzing. Doesn't mean you need to follow, but this is a very nice trade to the downside. So if this is showing you that, okay, it has bounced off on this place from here, it has made a high that is lower, because all of this is just more like consolidation from here. Or you can take advantage of that move. Since it's forming the second shoulder of a pattern, you should expect the market to sell. Is expectation even the right word? Yes, predict that the market will sell. So if we go to 1 hour, it's already showing you that the sell is already kickstarted, massive. So this sell will ride onto the downside, at least to this level here. At least to this level. At least. And if we measure the pip from here to this place, that's 176 pips. That's a lot of money. So you want to execute now, you go to 15 minutes. Only 15 minutes is almost even too late, but you can still enter if the market gives you a nice, see, the thing with this news today is that it favors the chart structure and pattern, which makes it more massive. So you see a lot of drop, massive drop in this market. And don't worry, unless that today is Friday, so the market is closing, but you see a lot of drop, massive drop on this because it follows chart patterns. You might see the drop up until this point. Let me take it. Yeah, you see the drop up until this point. And it's like there's a news for Canada. Let me see. Balance of, okay, it's yet to be out. So this is how you analyze market, right? Same. So before we go, let me just, for Mr. Leon, he said I should find a crypto pair. Now, the truth is for cryptocurrency, the approach to trade crypto is a bit different. Mr. Leon, are you with me?
Yeah, I'm with you. I'm with you.
All right. So the approach to trade Bitcoin is different. It's a cryptocurrency, and the movement of crypto is majorly based on fundamental news. And because it's based on fundamental news, the movement in the market is different. But overall, you can still trade Bitcoin regardless. So, what do you observe about this chart? Bitcoin has been on, Bitcoin has been on a perpetual buy trend, uptrend. So if we can pick maybe from here now, see, it's been going up, right? It's been going up. So your approach to Bitcoin and gold pair should be different. Should be different. So at the same time, monthly, weekly time frames are just for overview. Okay, what's the market doing here now? It's on an uptrend. So what we can do, first of all, you can just mark out these levels. The levels where the market bounced. You can mark out this level where market bounced. Mark out levels where market bounced or pushing up. Now, after marking that, we can go to the weekly time frame. So on a weekly time frame, you see that there are no much details here, just still confirming the fact that the market is still on an uptrend. Because if you open most crypto charts, it's like this. There's no much details, or not details. Yeah, more like activities of traders. So it's just a seasonal kind of a thing. So in a season, it buys all, then it relaxes for some few months. In another season, it buys all. Okay. But from here, we can, okay, let's go to daily. Weekly just shows you that, okay, there is still an uptrend here. So if you go to daily, it can give us more structure to mark out. So what we want to do now, first of all, shrink our chart, pick our trend line. Okay, for more accuracy, let's pick it from the recent low here, this high. So we have our trend line. We have a trend line from here. And notice that anytime there is a consolidation, like I said, what is about to happen is a massive move, either to the up or to the downside. Anytime the market consolidates, right? Just the same thing here, we see consolidation. Then when it breaks, it makes a move up. You can follow through that and you will see that that's how the market behaves. So there was a consolidation here, more like less activities, and the market broke to the downside, right? Made a W pattern to the upside. So let's open the chart. So we have our trend line drawn. Now, there are continuation of trend lines. Remember, we draw this trend line from here. Now, you can draw a continuation trend line from this point to this point. This is a continuation trend line. This is not your major trend, it's your sub-trend. You can choose to add text to it, sub-trend, if you choose sub-trend line. But don't forget, this is your major trend line. This one is your major trend line. Major trend line. So you can do this as a trader because most times market will bounce off here, bounce off here. As far as two touch, it makes this trend line relevant. Okay. So if we go to a 4-hour now and check what is going on from where we did, right? From where we draw our trend line. First of all, you see that there was a consolidation here, right? Consolidated, just making highs and lows, then it broke to the upside. Now, what's the market doing again? It's consolidating. So it's consolidating. Now, this consolidation, most times, if you notice this pair now, you see that it is consolidating and it's going to the upside. There's more likeliness that it will break to the upside. Are you seeing that? More consolidations we drew. If it's consolidating to the downside, as you can see, it's more likeliness that it will break to the downside. So right now, how is this one consolidating? As you can see, it's consolidating to the downside. So on BTC now, we should be expecting that the market breaks through this trend line. If it breaks through this trend line, just know there will be a massive dump to this point. But because of the recent activities of BTC, it might be difficult for BTC to break through to that level to come back to 92 or 88,000 because of the recent hype on BTC. That's why I said there is a way you follow cryptocurrency with much carefulness because it's not a pair. It's a pair now, we might expect that. For example, the news that came out now, it didn't affect it because BTC is traded differently. It's traded differently. But what we can do is we can catch this area and break it down. So let's catch this area and break it down and see what the market is doing. Because you can always draw more trend lines even from this zone, draw a trend line to this zone, which is still your inner trend lines, more inner trend lines, as far as it has 2 touches. So let's go to 1 hour. Now, Mr. Leon, are you understanding me?
Yeah, I'm following you.
Okay. So from 1 hour, you see that the market has just been truly, the consolidation is from here. See the highs and the lows. So what you want to be doing is to take advantage of the swings. So for example, when market comes here, you buy. When market comes here, you sell. When market comes here, when market comes here, you buy. So when market comes here now, what are we expecting? We're expecting a buy. We're expecting a buy. Why? 2 reasons. The first is the pattern. If you check the market structure, it has given us a W pattern, which is a double touch. Double touch, right? This is a double touch, and it's not just a double touch. It's a double touch on a trend line, a trend line, a trend line. There's a trend line here, and it's bouncing off on this, right? So is on it on this trend line. Again, if the market is retracing back, it can form a head and a shoulder pattern either ways. But on here now is a good opportunity to buy BTC USD. It's the same analysis. For example, see here, it's the same thing he did there. He made a double touch and it bought. Why are we buying? First of all, this market has been ranging. It has been ranging. And the range is on this level here. This is the key level for the range. Let's say here. Let me make it bigger. So this is the key level for the support. Let me say support for the range. And this has been the resistance for the range. So you are in between this box. So this is how to trade ranging market or consolidations. You wait for the market to come to the point where it's on the support, then you buy. Wait for the market to come here when it's a resistance, then you sell. Because as you can see, the market has been doing that. Yeah, 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 here. What are we expecting here? So this, for me, if I want to trade a crypto pair, this crypto pair, I will be looking for a buy opportunity on this. Now, it looks as though the market is retracing to allow it, allow it. Let's see the reaction around this. Let's see the reaction around this. If it wants to sell, it will break this trend line and give us a pattern that it wants to continue selling, then we can sell. But as now, we're still looking for a more opportunity to buy, right? Looking for more opportunity to buy. So if you follow market structure, normally this is the high and the low, this is the high and the low, this is the high and the low, this is the high and the low. So what are we expecting? A high following normal market structure. This is the low here. So market structure confirms that it should be buying. The range in which the market is confirms that it should be buying, unless that there will be a break out of this range now. So if the market breaks this range, then we know that our analysis should be a sell. But as far as it doesn't break this range and it gives us another pattern, we'll look for more opportunities to buy. So we can take any other crypto pair. Let me see if I have any other crypto pair. No. But just watch out for a buy around this region for BTC. Let me see. Okay, let me check TRX USD from. That's one thing with crypto pairs, their trades. I think this is even giving more. It's the same thing monthly. There's no much of activities like that. This was when the coin was launched. So from a monthly time frame now, we know that we are on an uptrend, right? So from weekly, this will be, there is a chart pattern like this. There's a chart pattern like this, but I can't remember. When the market makes this, it dumps. There's a chart pattern like that. From here now, I expect a dump. This just by chart pattern, not by any other analysis. So this is a weekly. I've seen a pattern. I don't know the name of this, but usually it comes like this, then it dumps. Okay, so going to a daily time frame now, right? We can just pick a section of this chart. From here now, we see that this chart is on an uptrend. It's on an uptrend, right? It's an uptrending market. Uptrending market, and it's been making, the reason why it's an uptrend is because it's making highs, lows, highs, lows, highs, lows, highs, lows, highs, low, highs. So this confirms that we are on an uptrend. So right now, if we go to 4 hour, shrink our chart. First of all, what we can see from this 4 hour, the market is still on an uptrend, right? And it has made a new high. Remember, anytime market makes a new high, it retraces. It makes another new high. It must retrace. That's the movement of the market. It makes another new high. It retrace. So the phase in which this market is now is that it has made a new high. It's made a new high. So what we are expecting is a retracement. Is basic structure. We are expecting a retracement, right? So having this knowledge now at the back of your mind, we're expecting a retracement, which is a little sell down. So we go with that knowledge to the 1 hour. Let's see what the current trend is telling us. So the current trend is giving us this. So we can draw a trend line from this top here down to this touch. So if you are following me, what pattern is this giving us? Okay, let me use a trend line so that it will be. There is a market structure that this thing is giving us. So somebody tell me which structure is giving us here. Check your structure booklet. What is it giving us? Market is coming from the top. Nobody is answering. No. Which pattern is this that I'm drawing here? Am I the only one in this class?
Sir,
Nah,
I sent in the chat. I thought you would check it. Triple bottom, sir.
Triple bottom. But triple bottom is a reversal pattern.
We're
Isn't
expecting
it?
it to go down. Yeah. Okay, we're expecting it to go down. So we're expecting a continuation pattern.
Yes. So from the list, check a continuation pattern. What is a continuation pattern?
Okay, this should be like a descending triangle.
Descending triangle.
Right?
Sorry. Is there noise on my background?
No, sir.
No, sir.
Oh, wow. Okay. That's okay. So let me see. Moses said triple bottom. Let me count it.
Descending.
So this is 1. This is 2. This is 3. Actually, he did a 4th one. But I'm suspecting that this market will break through to the downside to sell. Not because I'm seeing this candle. There are many reasons. First of all, if you understand candlestick formation, this, let me zoom in. This candlestick is this candle is known as a shooting star. Anytime you see a shooting star, know that the market is reversing. Candlestick formation, just this candle. This is a shooting star candle. This candle is a shooting star. So whenever you see a shooting star, the market is reversing. Right? That's one reason. Number 2, we are on a downtrend. This thing is more like a consolidation. These highs and lows, the market is a consolidation. Now, this touch here on this trend line, it has touched there. If you go on a lower time frame, you will now begin to see what pattern has happened on this level here. So let's go on the 15 minutes. You will likely see that is a double touch. It's not even a double touch. It's even more of a, This thing is complex now. There is a candlestick formation that is called evening star. This is an evening star. This is an evening star candle. More reasons to even sell. So this chart now, if I want to trade this, I will sell, but not from here. I'll wait for the market to come up, probably up onto this point, break this level, and maybe retest it, then go down for a sell. So because you can see, touch here, it went back, touch there, went back, touch there, went back, touch there, went back. So this level is a strong level. It either breaks it to the downside or it will break it to the upside. So this is a consolidation. Are we understanding me?
Yes.
Mr. Leon, are you getting it?
Yes.
All right, so it's the same idea, but cryptos are less predictable. That's just the problem with cryptos. So you trade them with other confluences, like what is going on in the crypto space, sometimes in news. But this non-farm payroll is one of the strongest, very powerful news. So usually when it comes out, it affects almost all pairs and cryptocurrency with USD as either the base pair or the code pair. So this little drop you see now is because of the news. Because of the news, and this is a quoted pair. You understand? So if we check GBP USD now, let's see the one that is doing. See, look at the massive push up. You know, I told you it's going to retrace, which it will do, and it will sell massively, at least to this level, at least to that level. And the reason is because the sellers will take opportunity of this run, and the market too will balance. The market will rebalance, but at the long run, because of the positive news on GBP, sorry, negative news on USD, the market will still be buying in the long run. So do we understand?
Yes, sir.
Okay, do we have any question? Nice. So I'm glad you guys gained value today. Hopefully, you're taking more of these classes. There is actually Forex is sweet, very sweet if you begin to understand some things. Sweet. So we're going to learn more, and we're going to see how we're also going to see more news events. Let me see the total PIP. So don't worry about this short sell. A buy will still continue. Wow, 145 PIP. That's a massive move. So whenever you open your chart, you see candles like this, just know it's a news event that occurred. A news event that occurred. And usually once, for example, see what happened there. I want to show you. Do you see that the market initially was going down with this candle? It was going down. The massive turn, it didn't even produce a wick. It shows you his news. Sometimes the market distracts like that. It will look as though the market is going down. But once the news come, you just see straight up turn. Well, I will show us to how to trade news sometimes. So this high now has been broken. We're expecting massive. It might retrace to this point before it starts buying again. So I think we should call it a day for today if there's no other question. Yeah. There is no question, we can call it a day.
Thank you, sir. I learned more than I've learned in the whole. I think the fact that it's a practical session, I learn more. Like I gain more from being practical.
Yeah. So we'll be doing more of that. We come, each person has like 5-10 minutes to analyze a chart. Analyze it, then we see how it is. Take a trade, and we might not put real trade, but just put your entry. Then we watch it. We'll know if the analysis is right or wrong. Okay, so have a nice day, everyone.
Yes.
You too, sir. Next.
You too.
Yeah, bye.
Thanks.